Hello everybody, Barry Wood, Fairway Mortgage. I've been getting a lot of questions lately from people asking about refinancing their homes. The first question I'm always asked is, what are your closing costs? There are generally 6 fees you will find on your good faith estimate. Which fees are usual and customary? Which fees put more money in the bank's pocket? Let's find out. In order to answer the question, how much are my closing costs, first we need to have an understanding of the types of refinance programs that are out there. First, you have your regular refinance program, and then you have the zero cost refinance program. I'm going to explain both of them for you. The zero cost refinance program is just that, a zero closing cost program. The zero cost program sounds good on the surface, but could cost you thousands of dollars in the end. We all know how business works, so is a zero cost refinance program really zero cost? Of course not. Your bank or credit union, just like every other business, is in business to make money. A zero-cost refinance is good in some situations. For example, if you're moving within a couple of years and you want to keep a little more money in your pocket for the down payment on your next home, then doing a zero closing cost program may be right for you. The reason lenders can do a zero-cost program is because they are going to make up for these costs in the rate that they charge you. The lender is going to charge you a higher rate than what you could get to make up for the cost that they do not collect up front. A zero-cost loan program sounds enticing, but if you're going to stay in your home for a while, this closing option could cost you thousands of dollars in the long run. Before you jump on board, make sure you understand how this type of refinance will affect you down the road. Now let's talk about regular refinance program. When talking to your lender about a refinance program on your loan, you're going to hear words like points, appraisal, underwriting, processing, administration, title fees, impounds. All of these are costs associated with a refinance, but which fees are putting more money in the bank's pocket? Which fees are usual and customary? Here are the 6 fees you can count on your good faith estimate. The first fee or cost is points. A point is a fancy word for percent. A lot of the banks you work with out there charge a point or more to do a refinance on a loan. Guess what? A point's money in the pocket for most banks, and it's an unnecessary fee. If your bank or credit union is charging you any points on your loan, then ask them why. The second fee is your appraisal. If you're looking to refinance your home, an appraisal is pretty standard and is always required. An appraisal can cost you anywhere from $350 to $400 depending on your area. An appraisal is not avoidable and it's something that every lender must charge. The third fee is an underwriting and processing fees, which are pretty standard. One must take into consideration that a lot of work goes on behind the scenes to get your loan to the closing table. The processors and underwriters put in quite a bit of time and effort to get your loan processed and approved. This is a legitimate fee for most lenders. The costs vary per lender, but a good average would be around $1,000. Some banks are a little higher, others may be a little lower, but generally speaking, around $1,000 is pretty standard. The fourth fee you may see is an administration fee. I don't think that anyone has ever been able to explain to me exactly what an administration fee is. Although the fee sounds important, it really serves no purpose except to put more money in your lender's pocket. The fifth fee you may see are title fees. Once you refinance your mortgage, you will usually have a new lender and a new loan amount. In order for a lender to refinance your loan, they need to make sure that there are no liens or encumbrances on your current title that would affect their interest in your property once they take over your loan. Title fees can run anywhere from $300 to $500 depending on the size of your loan and the area that you live in. And finally, the sixth fee that you may see on your good faith is your impounds or escrow fees. If your new loan requires you to escrow your property taxes and homeowners insurance, you will have to establish a new account for your escrows for your new loan. Usually the bank requires a cushion of about 2 months for your new escrow account. For example, if you're closing your loan in January, the bank will usually collect 3 months worth of escrows in advance to have adequate coverage to pay your taxes at the end of the year when they come due. Any overage or cushion in the payment that you make will be refunded to you after your escrows are dispersed at the end of the year. So let's get back to the question at hand. What are my closing costs? Generally speaking, closing costs are going to vary by lender. You cannot judge closing costs by an actual dollar amount. It has to be judged by the whole picture. Other things that need to be taken into consideration when you refinance are your current rate and term. These are even more important than any fees that you'll pay to refinance the loan. We will save that for another discussion though. I have always been an advocate of shopping around. Shopping around will make you more confident in your decision once you make one. Before you choose your lender, make sure you have the whole picture. Refinancing based solely off the cost or what you see on the surface could cost you thousands of dollars in the long run. It is my job as a professional in the industry to educate my clients and potential clients on everything mortgages. If you have any additional questions, you can contact me anytime or check me out on YouTube at Fox Valley Mortgage Guy. Remember, when banks and credit unions wouldn't, Barry would. Fairway Mortgage. Thank you for your time.